All right, what's going on, guys? It's Luke here. Today we're going to run through a video on when to go break even, what I personally do. This is the list right here. It's very simple, and I'm going to run through it pretty quick. There's not too much to go over. It's a very simple concept on when to go break even. Now, if you're a one-to-one trader and you primarily go for one-to-ones, you can still go break even before your TP gets hit. That's a misconception. People are like, oh, you don't need to go break even on one-to-ones. Some people don't, but there's points where you probably should, and that's going to keep you with a high win rate, and high win rate is usually going to be better for psychology, especially for me. So when to go break even, I would copy this list. These are the main times that I go break even. So it's when an internal high or an internal low gets taken out. So let me run through one at a time here, right? So internal high, internal low can be two things. So I'm going to run through I'll just read them over and then I'll go through these examples quick. So internal highs and internal lows. So that could be either one that's already there, or if we say we're in a trade, price puts in a new internal high and then we resweep it. So it could be like one of those two things right there. Unfilled gap, so this could be on any time frame. It could be like a 3-minute, a 5-minute, whatever. If you tap an unfilled gap, go break even. If there's an SMT with ES, so for example, say you're looking for longs and you're looking to target London high, and ES came up and took out London high, it's probably a good idea to move your stop loss to break even, because this could potentially be an SMT and price dumps against you. And then again, just ES took out the draw. So say you're aiming for it's the same, pretty much same thing. Like if you're aiming for a 15-minute low and ES took out the low, then you should probably go break even, because there's a good chance price can reverse against you. So SMT with ES and ES took out the draw, it's like the same thing. But anyway, you get the point. So I'm going to run through some examples for you guys really quick. I have trades from today. This is a trade that I actually took. I'm going to talk to you guys when I went break even on it. And then this one I didn't take, but I thought this was a good example. And then I'll try to find some other examples. I'll pause the video in between, but let's start with this one right here. Okay. This is a trade I took today. What happened? We had a higher time frame bullish bias. We're in a buy model. Draws and liquidity are higher. We're trending. We're at all-time high. Well, not all-time highs yet, but we're approaching all-time highs. So we are thinking like buy. We don't want to be trying to short, right? Even though I did catch a short and took a loss earlier, but regardless, price pulls back here on the 5-minute. What do we expect from here? We are expecting longs, right? I'm not going over my entries, and it's thundering right now, so just ignore that if you hear anything. I hope it's not too loud. But anyway, at this point, we're looking for an entry model. So I take this. I'm not going to go over my entry model specifically, but I take this continuation play off this 1-minute displacement candle right here. Again, we're delivering off a 5-minute gap, 1-minute displacement candle. And I was looking for a higher RR play, because I wanted to see ES flush higher towards these weekly highs. So my idea was to TP when ES took out the weekly highs. So if I'm looking for price to flush higher, this is going to be my break-even point right here. Why? Because it's an internal high. So this is exactly where I went break even. You see this internal high and this internal high, whichever. Once we crossed that, I went break even, and I took profit right up here. So it allowed me to get the full trade that I wanted for about 2.4R, right? So this is example number one, internal highs. If you don't want your take profit, obviously you could have taken like a 1-to-1 and TP'd there, but if you're looking for a higher move, these are the highs and lows you want to be moving your stop loss to break even at. Internal highs and lows, right? Now, another example could be when we're in the trade, but we form a new internal high or a new internal low. For example, right, we're in this trade right here. We put in a new high right here. So once we cross above this high, you can use that newly formed high as your break-even point. Obviously, it's not necessary because this is right there. But you see how we put in this new formed high right here? This can now be your break-even point. So if price retraces and you still have conviction in this trade, once it crosses that newly formed internal high that's formed while you were in the trade, you can also use that as a break-even. Okay, let's go over to another trade. I really like this one. I didn't take this, unfortunately. I should have, but it doesn't really matter. Price comes back. We get market open manipulation. And what happens? Price leaves a 930 wick, okay? We get a nice displacement candle up. Our drawn liquidity is this data high over here. But what do we have standing in the way? We have this high right here, but this high. This is a 930 wick. These are incredible points to go break even at or to take profit at. So what do? We use this as a break even point, because if price comes up to here and it doesn't flush through it, there's a high probability price will come down, reverse, and stop us out, right? So we want to mitigate our risk and go break even at this internal high. Why is it internal? Because it's inside the move. Like, we're inside the range. It's a high that's put in inside the range. This is the external draw that we want. So internal, this is where we're going break even, right? And then for using that other example, we're in the trade here. We put in this new internal high. This can be your break-even point. Again, it's not a great example because it's right next to this high. But once we cross this newly formed internal high that's formed while we're in the trade, we can use that as our break-even. Regardless, you'd be going break-even on this candle right here because it took out the 930 wick, which is the internal high. It also took out the newly formed internal high. And then you hold to the TP, which again was this data wick. And there you go. So that's pretty much it for internal draws and liquidity. It's very simple. You're looking at internal highs and internal lows that are put in between your entry and your take profit. Because again, if price is going to truly go in your favor, what the hell was that? Okay, if price is truly going to go in your favor, it's not going to sweep out this internal high and then just start like, if it's going to do that, it's probably going to come down and stop you out. You are getting in these trades because you want to see price flush above this internal draw. So price should flush above, which it does right here. And that's how we know we're correct and we're on side, right? Price closes above, displaces through the 930 wick, which is the internal high, and it delivers right to the draw on liquidity, which is our TP. Perfect. So I'm going to pause the video really quick and I'm going to get you guys some examples for the other points. Okay, so I just have two short examples here, okay? Let's say we're looking for shorts. Entry doesn't really matter in this context, whatever. We get this nice displacement close. I want to see price run through this low resistance liquidity right here, right? So I take the short right here. Basically, okay, look at this. We have this internal low, but I think price is going to flush down to this unfilled gap right here. That's my target, right? I want to see price run through this. I'm going to take this short right here. I need to move my stop loss to break even once it crosses this low right here, right? Why? Because if price comes down and sweeps this low, it should theoretically flush through if our bias is correct and we're on side. Otherwise, there's a high chance, not a high chance, but there's a chance price can sweep this out and go against us. So we're going to mitigate our risk and go break even at the internal low. This low is the low that's in between our entry and our TP. We want price to flush through this. So we're going to mitigate our risk and go break even. And if we're truly on side, price should just flush through it. And there we go. We actually end up getting this, right? I think I took this trade, actually. I can't really remember. So now here, this is another example. This can be for internal highs and unfilled gaps. Let's say we take this long right here. I thought this was a great long. I actually remember this trade. You get this 2-minute CISD right here. And let's say you want to target these relative equal highs. You see you have these two relative equal highs right here, and that's your TP. You have a bullish bias. You got entry confirmation. You want to see price flush towards those relative equal highs because that's your draw on liquidity. Great. Where do you go break even? Well, if you look between your entry and your take profit, you have a 2-minute unfilled gap. On top of that, you also have internal highs because you have these internal highs right here, right? So this is going to be your break even point. Because if price truly wants to continue bullish, it should just aggressively flush through that 2-minute gap and those highs. Otherwise, if it's going to tap into this gap and reject off it, there's a good chance it could come down and stop you out. Now, why don't you go break even at these highs? Okay, well, you got to use your brain sometimes. If the internal high is this close to your entry, you probably don't want to go break even. This one, at least you get a bit of room. But you got to give your trade a little bit of room to work with. If the internal high or low is literally right by your entry, you know what I mean? You don't want to be going break even, especially if you have a strong draw. We have relative equal highs. You're getting nice displacement. Overall, this looks like a great trade. So where do you mitigate your risk? You go break even at this unfilled gap. In this case, it is a 2-minute gap. Once price, taps into it, whatever, break even. Because if price is going to tap into that gap and reject, there's a chance it can come down and stop you out. Why would you want to be in this trade? You know what I mean? It should just theoretically push through and, deliver to the draw, which again, right here it does. It delivers right through the gap. So this is an example of an unfilled gap. You go break even at literally an unfilled gap that rests between your entry and your take profit. It's literally, I don't need to show like a bunch of examples. It's really not that, complex. I'll see if I could find another good example. Let me look really quick. If not, I'll pause it and take my time and look. But even like, let's see. Hold on. Let me just look for something random really quick. See if I could find anything like on the charts right now. Well, this price action is terrible, but let me see this actually really quick. I don't think we have an unfilled gap, but looks like a decent example anyway. Let me check on the higher time frame. No, but this looks like this is a good example. Again, you get a 2-minute inversion entry right here. Take your entry and say you want price to come up and you want to target these relative equal highs right here. Where do you go break even? You're looking to go break even at these internal highs. If you want to give it a little bit more breathing room, you can go to the 1 minute and see if you find something a bit higher. But again, that looks pretty good. Price should aggressively flush through this. And again, perfectly flushes through it. We get the close above. It should just continue to flush higher. Let me see if we could find them again with an unfilled gap. It's hard to find in this price action. Just let me look for one really quick. Like this one right here, right? You take this long right here, whatever reason you have for taking this long, stops there. You want to see price push to this draw right here. You go break even maybe at this unfilled gap. Price comes up to this gap, and you probably get break even there. Price does end up running, but again, it's not going to always be perfect, right? Let's see if we can get another good example. Here, I'm going to pause this really quick. I might have one. Just give me 1 sec. All right, for example right here, right? Let's say we go for this long. We get an SMT off these lows right here. We get a nice 1 minute close. And I want to take it up to these highs. I'm just very confident. Maybe we get a 30-second inversion right here. But what do we have in the way from our entry to our TP? Let's see if we think price is going to come all the way up to these highs right here. We catch the 100-point move. What do we have in the way? Unfilled 5-minute gap. Okay, so do I want price to come into this gap and go and start rejecting? No, I want it to flush through, right? That's how I know my trade idea is valid. So let's press forward. Okay, I'd be going break even right here. And then price flushes through and it delivers perfectly. So wherever your entry is in your take profit, you want to be going break even at internal highs or lows. So for example, this internal high or this internal high or unfilled gaps in between. It's very simple. And you really don't have to overcomplicate it. Again, if price, say there's no internal highs, you could wait for price to go in your direction, put in a new internal high, and then once that gets reswept, you know what I mean? You can go break even on that, on the newly formed internal high. So like, for example, in this long right here, you'd go break even on the break of this. Obviously, it's all the way up here, but I'm just saying if there's no internal highs or lows to target, you can wait for newly formed highs and then go break even after we like break above those, if that makes sense. So I'm going to pause it here, and then we're going to go through some examples on like SMTs and how to TP with SMTs and ES. So even from this same example, we can see an SMT example here, right? So say we take this long right here and we have this as our TP. We want to target this high. And if we go over to ES, what do we notice? ES has now taken out that high. So we have two options right here, right? Do we take profit right here, or do we continue to hold because we have conviction in that draw? Now that's going to come down to you basically, right? And the thing that you can do here, again, you could take full TP. Just ignore that candle, but you could take full TP here and you could be fine with it. Or you could look at ES, and what you have to do is you have to see, does ES still have room to push higher? Because if ES has room to push higher, what's it going to do? It's going to pull NQ up with it because they're correlated assets. So we look here, okay, ES has relative equal or equal highs right here. There's a high probability that ES is going to want to come up and take out those equal highs right there. So therefore, I could probably stay in this trade and be hopeful that NQ will take out my take profit and that ES will continue to pull NQ higher, since again, ES and NQ are correlated assets. But once you see this SMT, again, ES takes out the draw and NQ hasn't taken out the draw yet. You can be cautious. Here, let me press forward so you guys can see it again. You can either take profit and be happy with it, you caught majority of the move, or you move your stops to break even and you look at ES and you say, okay, does ES still have room to pull higher? Again, in this example, it has these equal highs. Let's press forward and boom, ES delivers higher because we have not only equal highs, we have all of this low resistance liquidity right here. And what does it do? It pulls NQ up with it and we hit full take profit. So even though ES takes out a high and NQ doesn't, or ES takes out a low and NQ doesn't, it doesn't necessarily mean it's going to be an SMT, but it is always going to be a good idea to at least move your stop loss to break even, because there is a chance, you know, this SMT here could technically hold and push price back down against you, and you want to at least be able to mitigate risk. But one thing to determine if you want to whether close the trade out here and just be fine, or if you want to hold to full take profit, is go over and look at ES and say, okay, does ES still have room to pull higher or lower? Does it still have more draws? And if it does, then you expect ES to continue to pull the weight and for NQ to follow. But that's pretty much it, guys. There's really not much to go over with these SMT examples. Basically, if NQ takes out a high, or sorry, if ES takes out a high or a low, and NQ hasn't yet, it's always a good idea to just move your stop loss to break even. And then to determine if you want to continue to hold the trade, you look at ES and say, does it still have more draws to continue to pull forward? And if it doesn't, then you can be okay with full TPing. And if it does, and it still has draws above or below, then you could continue to hold to your full take profit, but at least mitigate your stop loss to break even. Again, when the key times to move your stop loss to break even: internal highs and lows, unfilled gaps, and when ES takes out a high or a low. Because again, even if it does this, you want to see price flush through, and if price is going to hold this SMT and push down, you don't want to be in this trade. You want to just get taken out break even, because there's a good chance it can come down and stop you out, and you're going to be mitigating your risks, and you're going to be having a higher win rate with this. So that's it from you guys. Really quick, there's nothing much really to go over. I don't need to show a bunch of examples. Like, it's really not a hard concept, but that's gonna wrap it up from you guys. Hope you guys enjoyed, and I'll probably make another video on this, going over with more examples another time when I actually get more you know, good examples. But like, I think you really get the point with this. I don't like to show too many examples so it gets confusing. But anyway, that's it from you guys, and yeah, we'll wrap it up here, and I'll talk to you guys in the next one. Peace.